All right, hi everybody. Welcome to tonight. This is called a random list of trading comments. As usual, I probably have more than an hour, so I'm going to try and get through this fairly quickly. A couple of comments on these. Let me go to the opening slide here. This will be recorded, of course, and put on the DTS Free Stuff page and on the DTS YouTube site. So if you're not here, you won't be hearing me say that. You won't know. But if you have to leave early or if you missed something I said, whatever, you can always pick up the recording. Here's what was sent out to you. I said I would come back and tell you if I thought this was a good one or not. I actually think it is a pretty good one. Now, this is not going to be loaded with charts. I put an obligatory chart in here because any one of these could have a chart to go along with it, but it's all kind of just, it's like the obligatory sex scene in our movie. It's kind of like the obligatory, here's a chart to make my point. All of them could have charts. I put one in here after something, but this isn't really about, these are more ideas type of thing. So it's going to be a random list of comments. What are these? Well, like it kind of says, these are the poor little orphans that aren't really good enough to garnish a seminar all to themselves. But there's so many ideas that overlap and mishmash and crisscross. You look at some of these, you may say, hey, you talked about that. Yeah, well, everything I've talked about before. But these are some one-line comments that I think maybe are extra special and haven't necessarily had a webinar devoted to themselves. So what it says here is, it has happened to me personally, and I've had many traders say the same thing. I heard that one little comment and it hit home. It changed my trading career. And that's what happens sometimes, you build up all this knowledge, you build up this, this wealth of, whatever that you've learned. I can remember back when I started trading. I was new to the market. I was never in the market, never was a market maker or something like that. Well, obviously I wasn't a market maker because I trade well now. Market makers never trade well. But no, seriously, I remember back when I started, I was still, wasn't as quite as digital. I still had magazines and stuff, and I had notes and comments, and I remember just having like this whole unorganized mishmash of stuff, and I said enough, and I just kind of took everything and boiled it down to like one document, you know what I mean, and got rid of all magazines and notes and comments, and that was kind of a big deal to me, and I remember that being when the light bulbs really turned on, and after that, then you occasionally hear a comment or two. I remember I have, my favorite comment I heard, most of you know what it is. But so many times when I'm teaching a seminar, especially the second day, the Mastering Advanced Tactics, there's a bunch of little DTS trading tips in there, and they're little blurbs. And I can't tell you, I probably had, I don't know, a lot of people. I mean, probably every other seminar, somebody will email me and say, that one stupid little line, it really hit home with me. Like one of them was, you can't hit maximum targets and preserve every penny of profit. It's an obvious thing, but somebody said to me, wow, that like changed my trading career. Just that realization, I'm trying to do both and I can't do it, right? So sometimes one-liner comments can make a big difference because you're just on that verge of getting it. And that's why I went back to my comment about cleaning up my desk and my computer. And you get it all together and you're just on the verge and that kind of puts you over. So that's what tonight is about. For some of you, it may not be a big deal. You say, yeah, I kind of know this stuff. Some of you, maybe you're going to say, yeah, I kind of knew this stuff, but maybe you don't know it and you should be listening more carefully. And some of you may go, wow, a week from now you say, boy, that little thing is still sticking in my head. So let's begin. We're going to jump right to it. I ended up having 12 of these. And they came from, just like I said in the advertisement for this, and the slide I was just on, all the time, like I have a headset next to me all the time when I'm at my desk, and I have the Dragon dictation. All the time I'm turning on the dictation and putting down notes, comments, and at this point for me, most all of my thoughts, well, they're either personal comments, not trading things, or they're how to teach something better, and that's what I end up with. And then sometimes I end up with this whole list of stuff, and then they sit in different files, and they become the topics for the practical application review days I do to seminar students. They become topics for webinars. They become topics for emails. And I notice after a period of time, there's these group of things that are just kind of sitting there that never garnish a topic. So let's begin. I ended up with 12 of them. It's 5:06. Let's get to the first one. And you know what? I actually I had these all done. The content is 100%. but I didn't pretty these slides up with some nice little funny cartoons or anything. I just kind of ran out of time. I had a busy day and I was a little behind in getting this organized. So the content's all here. But I would not be surprised if you see a typo or two, or maybe some little error somewhere, but I'm sure you will point them out to me. RLOTC, anybody know what that stands for? What the heck is that? The reunion of, it's the random list of trading comments. I'm waiting for somebody to ask me. Random list of trading comments. Yeah, exactly. Number one, common sense will lose money. Even intelligent common sense, you have to think differently. And then it says, why is that? Why is that the case? Common sense is a good thing to have, but why is it that common sense will actually lose you money? There's a reason for it. It's a one line answer, and I want you to understand it because it will help you very much in accepting why so many things that many people look at in the market don't work. And this will actually include the whole concept of fundamentals, of news, why that stuff is all garbage. It will never help you. People sometimes think it helps them because of the difference between causation and correlation. Boy, the herd. Not sure if that's the right answer. Anybody else want to take a stab at the right answer? Why is it that common sense will lose you money? You have to think differently. When you understand this, when you understand this line, this was kind of neat about tonight. I mean, this is kind of maybe a way to understand something I try to get across to people in so many different formats. And maybe this is a one-line thing that'll do it for you. Well, I don't think it has its own rationale, Eric. I don't think that's actually the correct way to phrase that. I'll give Dave a shot at it, and then I'll tell you what the answer is. Well, the answer, according to Paul, you may not agree with me, of course. Well, it is on the charts, but why does common sense not help it? Here's the reason why. Stocks, Forex, whatever you want, the market itself is the greatest looking forward discounter on earth. Do you know what that means? It is right? Does that make sense to you? It is the greatest forward-looking discount. In other words, prices today are valued at the perception of somebody, we don't know who, a group of people, and they're valued to sometime in the future, we don't know when. And it changes, right? Does that make sense, everybody? Everybody got together and said, well, you know what, I don't care what the stock is worth today, but I think in the future it'll be worth X, and I want to own it before it gets to X, and it starts going toward X. But maybe in another 6 months it'll be worth Y. You see what I'm saying? And you never know where we are on that scale. And that's why it's always just this auction process of what people think something is worth. And that's why you can't look at stuff like fundamentals and news and say, oh, gee, I knew that. And again, if you want examples of that, I mean, so many different presentations I do cover that, including the intro class. And it was something I wanted to do was then after each one of these is direct you to the free stuff page and various things that you could be looking to get additional answers. And I will try to do that a little bit. I didn't actually put the names of the videos, but for this one here, I mean, there are so many things that I do that are dedicated toward what it is you need to look at to make money, right? Well, Gary, if that is common sense to you, then you are very sharp and you get it. But that is true, that the market is a discounter of forward-looking prices to an extent that we don't know, right? That's just it. I mean, if we knew that, we know exactly what something should be worth and what the true value is. But the value is whatever it is currently trading for at the moment. Let me give you the free stuff page here, so those of you who aren't familiar with it. And again, I don't have any specific one video for you to look at for this. A lot of what I do reflects this, talking about why charts are the only answer. Because what is the synthesis of all that forward-looking thinking? Well, it's the price that prints on a chart, right? It does not matter what you think Microsoft is worth today. It doesn't matter what you think about the deal with or without who they buy, the ATVI. None of that matters. None of it matters. I mean, it matters, but how it matters is a discussion that is above all of our heads because it's already done. It is already worth X, period. Let's move on. By the way, if any one of these you think is going to be something that you look back and go, wow, that could change how I think, give me a little light bulb on the screen, would you? Like you just type LB or something. I love light bulbs on the screen. I don't mention that often. But it just simply means, hey, that really hit home with me. Okay, most traders chase things that can only make money if the stock had a record move. You have to learn to make your salary on ordinary moves. Big moves should be a bonus when you get them. This is actually the topic of an event that I did. So this one did actually get a presentation all to itself, but I want to put this in here because it is just such a common problem I see when we have the scanning nights on Monday night, when I have new people in the room. It's always, chasing something that is so far gone. It's probably at a target already, and we're talking about getting into the position. On that free stuff page, there is actually an event called Ordinary Moves. And remember, when you look at the free stuff page, a lot of stuff is, gone to the archives page. So at the top of every section, go to the archives page if you need to find it. And on any web page you're on, you hit Control F, and then you can search the page for a word like ordinary. If you are day trading, and really this also applies to longer term trading, but it's less prevalent in longer term trading. Psychology tends to affect the day trader more. Why is that, somebody? Why does psychology affect the day trader more? I said that as a swing trader, longer term trader, you could maybe survive without a trading plan, because a trading plan is really your defense to psychological issues in a sense. But as a day trader, you will fail if you don't have a plan, right? Right. Things happen. Right. Less time to be rational, right? Exactly. When you're swing trading, day trading, you come home from work or the market closes, you see it, you get mad, you go, oh well, boy, I'm going to get out of that, I'm going to do this, I'm going to take my target, and then you know what? It's 12, 14, 15 hours before the market opens again. And during that period of time, your rational, smarter person comes through and says, no. You said you're going for this target. Why are you going to get out of it tomorrow at open? Stick to what you're doing. But as a day trader, it's hard for that smarter voice to come through because, our idiot is there handling things, and we normally don't get a chance to override them. So I titled this for day trading, but it's true in all accounts. It's just less prevalent than it is for the day trader. Before the market opens, take a couple of minutes to ask yourself, is there anything I learned from my trade review that I need to fix? And then it says below, there are actually several things. Those of you in the trading room with me know this list of things because we do it most every day. A lot of days, I haven't done it in a while, but a lot of days I'll take a pause 2 minutes before the market opens. Remember when I used to do this a lot? I haven't done it that much lately. I don't know why, I should. But I take a pause, a couple minutes, and say, okay, everybody stop. Everybody stop, sit back a minute, let go of the mouse, stop looking at the screen, just sit back in your chair, and just think for a minute. The market's about to open. What are you going to do? What are you about to do? What are you not supposed to do? What did you have to change from yesterday or last week or last month? What are the things you're working on? Are you going to change them, or are you just going to do the same stupid thing? Trades you're looking at. Any trade that you're looking at, how are you going to handle it? Is the market going to tell you how you're going to enter this, or are you going to tell the market how you're going to enter it, right? That's what you have to do to be organized, disciplined, and to be in control of your trading career. Does that make sense, everybody? I'm on RLOTC number 3. Does that make sense? RLOTC number 3, and I don't see any light bulbs yet. I'm very disappointed. I'm getting bad at this. All right, next one. Good trading should be boring. Now, we have fun in the trading room sometimes. We do the booms. But what I mean by that is, what I mean by good trading should be boring is that it should not be an excitement activity like you're watching a football game or like you're gambling on something. We're not gambling. We're running a business. We're doing a business. And part of that business entails the fact that you will have winners and you will have losers. How you handle the winners, how you handle the winners, and how you handle the losers inevitably will decide how your career goes in trading. But it should not be any crazy jubilation to have a good trade. That's what you're supposed to do. It should not be any huge disappointment to have a stop out, because a stop out, a trade stopping out, if you did the correct trade and you handle it properly, a stop out does not mean you're a loser in any way. A stop out, listen to this carefully, is an integral part of a winner's trading plan. You can't trade without losses. And you have to have the attitude of saying, hey, I know my track record. I know how I do. And if that trade stopped out, I'm excited because that means that the next couple of trades are probably going to be winners. Good trading should be boring. It's just a business. You just got to know at the end of the day, at the end of the week, okay, I'm going to end up with X trades. I'm going to have probably about this many winners in a certain range. My winners are going to make a little more than my losers, a lot more, whatever it is for your trading, the way you do it. And boom, I'm going to end up profitable at the end of the week, end of the month, no big deal. This is just one trade on the road to that inevitable conclusion, right? Good trading should be boring. RLOTC 4, RLOTC 5. The reverse is also true. You cannot trade nervously. To do that, you have to gain confidence. You get that by knowing charts well enough to find that moment in time. Now this, again, today is kind of one-liners. So it's a one-liner, but it opens the door to a huge, huge topic. And I guess that's maybe the benefit of today, is rather than starting to bottom up from a topic, we're kind of giving the one-line summary of a variety of different topics. And all of these that hit home with you, you should know to look into them much more carefully. But this opens the door to a whole lot of things. It's that whole issue about new traders. Actually, I actually just took some notes today for another email or a separate presentation, talking about the fact that as a new trader, if you start off like risking larger amounts of money, I was thinking about this today. I don't even know how you could possibly succeed. I don't even know how that's possible. Because when you consider the fact that trading is about odds, right? So even if you are perfect, you know that you're going to have winners and losers. You can't avoid the fact that some luck comes into the equation. Do you agree with that, everybody? That there's some luck in trading? Yeah, you better believe it. There's luck in everything in life. That's not taking away from your skill. Naturally, you have to be skillful to get yourself in a position where luck can benefit you, but you can't tell me there's not luck. I mean, one day you get sucked into a trade by a penny, a single penny, and it's a stop out. And the next day, you miss that trade by a penny, right? And you avoided a stop out, whatever it is. I mean, there are times where you are going to stop out of a trade, and you will find that you got out on the low of the day to a penny, if you're long, whatever that is. Now, those of you that are students of mine know that that one of my big teaching things is to teach you to avoid that, right? And I probably stop out, on the low to the penny, 99% less than most of you listening to me do, because I know how to avoid it. But nevertheless, it can happen. No matter how careful you are, no matter how much you try, no matter how much you want to avoid it, it can happen that you stop out and boom, you're the low of the day and it never goes higher. 1 penny. That's just luck sometimes. You can't have that, right? I had a discussion one time that I had a hard time believing. It was actually on the phone with somebody who I didn't know the person, but I mean, he had been around a while in the trading room, et cetera, and he's kind of gone now. But I interpreted him as a fairly intelligent person. We had this odd discussion that he said he would never, ever stop out by something by the penny in hindsight. And I was like, well, that's impossible. That's a mathematical impossibility, right? I mean, unless you're never going to stop out of a trade, well, okay, then that'll happen. You'll be broke, but it'll happen. But I don't care how careful you are, right? No matter what it is, no matter what you do, even if you pull out, whatever it is to try and avoid it, if you're going to get out of a trade, at some point you pick a number, at some point you hit the button, and that could be the low of the day. You just can't help that. So there's probabilities, there's luck, and when you're new, you don't even know what's right or wrong, right? To be honest, you don't know what's right or wrong for a long time. So it's only through having the skill to learn, the education to understand, and then to build confidence by doing what you know is right and being able to say, okay, that didn't work that time, but you know what? I know why it didn't work. I goofed, or I'll do it again next time because that's what I do and it just didn't work this time. And as a new person, I don't know how you get that confidence when you first start off without doing things properly. If you do things properly, you build confidence. But this is so critical that you have to do things properly, to get to know charts, to start off with low risk amounts. And this is why, I encourage people and I tell people, and I've turned some people down from the seminar program because they wanted to sign up with the attitude of, hey, I need a quick money making scheme. I got a lot of bills to pay tomorrow. I said, no, that's not how it works. You have to start off a little bit slow. Now, maybe in 60, 90, 120 days, you can be up there making significant money. There's a plan for the seminar students, and also for all of you can access it on the seminars and coaching page. It's called a 100-day schedule. It's not magic. It's just what I feel the approximate, appropriate approaches time-wise to trading. Few people understand this one. Few people understand. Everybody has the attitude, just show me the chart or show me the magic thing you need to make money, and I'll do it. And it doesn't matter what magic you show them, they're not going to do it because they come up 5 cents short of a target one day, and it turns out they give back all of that trade, and the next day they swear not to do that. So now they're taking, just fractional profits because they don't want to miss and give it back. And they end up in a rut that they never get out of. So learning the right way, building confidence by trading small initially, and then simply increasing your risk to whatever you want as you continue to prove yourself is what it's all about. I have no notes for this one. Number 6. It is never good to sit and stare at the screen all day, especially when you no longer have a plan. Now, I personally trade the opening 90 minutes. That means I'm at the desk, sitting down, diligently working hard I start like at 8:30. For you, if you're not running a room, you probably wouldn't have to do that. Between 8:30 and 9, you sit down, get prepared for the day, and then I'm done 10:30, 11 o'clock typically, right? There's some exceptions to that, but that's the general rule. Now, you don't have to follow that schedule. You can have your own policy when you want to work. I've always said I could totally understand somebody waking up at 9:30 Eastern time, looking at a gap list or something and start trading the 10 or 10:30 reversal times. It's perfectly fine. I can even see trading lunch. I'm not a big fan of the afternoon, but I can even see trading lunch. There's things you can do at lunch specifically that work very well. But I think you had to focus your time and attention to a 2-hour window as a day trader. Now, this is a day trading concept that doesn't apply to long-term really. But at some point, you will run out of a plan. When you find that you're back to the previous, but when you find that you are sitting there like you're watching TV, which I think is actually another blurb coming up here, that's not good. You need to be sitting there with a purpose to say, look, here's my list of stocks for today. Here's some things that could have set up, but they're not setting up. Forget about them. Here's some things that are setting up or could set up. Here's my focus. Here's what I'm looking for. Boom, 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 boom. Do them or discard them. And then, when you're done, what are you going to do? I don't really believe it's correct to go start looking for stuff to get in trouble when you no longer have a plan or your best stocks in front of you. I know a lot of people don't necessarily agree with that. A lot of people have FOMO and are afraid they're going to miss something if they leave. But what you need to track is, what always amazes me, what amuses me, is that a losing trader will tell me how I'm wrong with this concept. That always kind of amazes me. And they'll tell me, well, boy, in the afternoon, Paul, look at these trades that you missed. And yet they took trades and lost money, right? How does that make sense to you? Sure, every day you come back, you can find things that you miss. You know what? Finding the things you miss doesn't make you a penny. And it's not the point. How do you know you missed them? What does that mean to miss them? Do you just look at any stock that moves and say, oh, gee, I could have been in that? Yeah, you could have been in anything. But you know what you usually get into? You usually get into the ones that stopped you out. You're looking at the trades that moved and you say, oh, I could have been in that. What about the trades that started to move, faked you out, and went the other way? Did you ever come back and say, man, good thing I wasn't sitting here. I would have stopped out of 6 different things. You need to be fair with your assessment. The truth of it is, if you're sitting there longer than you should be and you give back profits, it's a problem. Let me tell you a little story that, again, I like statistics. I can sit here and talk, right? And you can believe me or not believe me, depending on what you think of me. Let me give you a little statistic. I used to be, long ago, I was associated with monitoring prop traders. These are proprietary traders. So it was the company account, so I could see the traders. And you know what an amazing thing that we found out was? That of the traders that were profitable at 10 o'clock, 90% went negative by the end of the day. Let me say that again. I'm not saying 90% are profitable. I'm saying if you took a snapshot at 10 o'clock and said, look at all the profitable traders at 10 o'clock, 90% gave the profits back. What does that tell you from a common sense point of view? What does that tell you? What does that tell you? 90% of the traders, and this is a large group of people over a large period of time, 90% of the traders who were profitable at 10 were in the red by the end of the day. What does that tell you? Yeah, yeah, keep going. Yeah, right. It tells you exactly what this slide says, right? Well, not necessarily stop at 10, Gary. Again, I'm not, yeah, based on the example I gave, maybe yes, yeah. But my point is to focus on your period of time that you're good at and do your trades and move on, right? You can have two different times, right? You can have a couple, but sitting at the screen for 6.5 hours is wrong, period, right? Sitting at the screen 6.5 hours a day trader is wrong, period. If you make money doing that, congratulations. We'll beg to differ, and if you've been making money for years doing that, congratulations. But it's a tough thing to do. Light bulb, thanks, Harold. Cool. Another light bulb. Whoa, double light bulbs. Wow. Okay. Next. The high of the day is not a strategy. This is kind of a cliche. I don't mean to limit this conversation to the high of the day. What I mean to limit this to is what I call cookie cutter patterns, sort of. I think there's another slide that's going to overlap this one. The next slide, actually, this leads into the next slide maybe a little bit, so I'll save most of the conversation for that. But if this is how you're trading, like, oh, go long over the high of today or yesterday, it's very unlikely that you're having any success. Now, it's possible, it says at the bottom, it could be, it could, but not likely, be an entry. So you might end up with your entry being over some, nationally known concept like the high of the day or whatever, or yesterday's high. That can happen, but it's kind of rare, to be honest with you. If your trading style, even as a swing trader, has something to do with over the high of yesterday, that's just wrong. There is no such thing as long over the high of yesterday. I don't care what the setup is. It may coincidentally turn out to be that the proper entry ends up being over the high yesterday, but to say those words is incorrect. It's never right. So this is kind of just a generic, all the cookie cutter things. And by the way, there is a presentation about cookie cutters. I forgot what it's called though. Where I talk about all these generic patterns, the head and shoulders pattern, and all these things that you learn in technical analysis. They're all garbage. They're all complete crap. Sorry, they are. And I know you, and some of you will probably email me now and show me a head and shoulders pattern that worked. Of course, you can find stuff that works. Head and shoulders patterns are garbage. Ascending, descending triangles, garbage, crap. All the cookie cutter pattern names that you know just aren't going to do it. I bet you if I give you a quiz, I bet you that half the people listening in here couldn't even define what a breakout is properly. More than half, 2/3 of the people that send me questions about a breakout trade, the trade they took was not even qualified as a breakout. They don't even know what the term really is. Naturally, I have my definition for a DTS breakout, but even beyond that, just forget about what I would call a breakout. People are sending me stuff that actually they should have shorted when they went long. Their knowledge is so poor. So cookie cutter stuff just doesn't work. It's learning to read a chart, understand the language of charts, and you find strategies anywhere you look. You find concepts anywhere you look. I'm a mariner, ship officer, so stand at 4-hour watch for reasons proved out over time. Oh, okay. Right, Mark. Yeah, absolutely. Yeah, and that's obviously in many industries. I mean, it's longer times than I'm talking about with 2 hours. But I mean, yes, you lose focus. You lose. Here's a test you can all do. Here's a test you can all do. And actually, you probably don't have to do it. You could probably just think about it, right? If you're at the screen and whatever's going on, and maybe you're frustrated or maybe you had a good day, whatever it is, and you're not sure what to do next, walk away for 30 minutes and come back. And it's like you have a whole new brain. It's like you have a whole new look at the screen. It's just amazing. Has anybody ever done that? Anybody want to testify to that? That you walk away 30 minutes as a day trader and come back, it's like a complete refresh, recharge. It's like a whole new look at everything you're doing. It's just amazing. And this is part of what I'm talking about. You get lost. Here's a good a good cliche, you get lost in the trees when you sit there more than an hour or so. You get lost in the trees. And you walk away, you come back and you see the forest again, right? And you're like, oh my gosh, I was thinking going short that stock. This is a bullish day and the stock is not anywhere near resistance. What am I doing, right? You come back and you see things better, right? Lost in the sauce. That ought to be a TV show. Mini 4-hour, okay, cool. All right. And that kind of leads to this next one, which I think is one of my favorites. Yeah. If you have strategies that have an entry as part of the strategy, you're likely losing money. Well, it's another way of saying that you're involved with just cookie cutter patterns, right? A head and shoulders is a great example. I mean, the entry on a head and shoulders is ridiculous. It's stupid. It's crazy. It's insane. I mean, literally following what a head and shoulders pattern would be, or a lot of these other things, they're just insane. What I teach entries as a totally separate concept. In other words, we always want to find an area on a chart that is the area, right? You never buy an area, you never short an area. An area becomes a spot of focus for you. We'll pretend this writing here is some kind of resistance area. So we're coming up to an area we think is going to be resistance. And in area, a stock is never, ever like a long at this number or a short at this number when you're far away from the area, right? You come up, you don't short 26, 29. That's ridiculous, because any area is an area and it's a range. It's like a big piece of foam rubber, a mattress. When you get into that area, then you look for an event to confirm what you think may happen. So you have areas called pictures of power. You have a concept. You then look for a reaction to that area, and you have an entry. That's how you trade. Does that make sense, everybody? It may make sense to you in a theoretical sense if you're kind of newer or don't know what I'm talking about, but it's critical. I mean, you won't make money any other way. And we're flying along. We might be on time tonight. Number 9, when you're looking at the charts like you're watching TV, it's time to quit. Do you know what I mean by that? Does anybody know what I mean by that? When you're sitting at the screen, you feel like you're watching TV. You're watching the old reruns of Gilligan's Island or something. Anybody experience that? I'm gonna go crazy. I'm gonna start yelling on this one. So turn your speakers down a little bit, or tell the children to leave the room if somebody's listening to me. You know what I mean by this? Yeah. When you were sitting there trading, if you were in front of your charts, and this is true whether you're long-term or day trading, but again, it's a little more applicable day trading. You should be sitting there with purpose and with focus, and have things that you are actively looking and needing them to do to complete your request. Stocks need to complete your request. And what this means, I have it written right at the bottom here. Don't let stocks tell you what to do. Now, there's a fine line difference here. Because sometimes if I put that, I could see somebody saying to me, well, Paul, don't we react when something happens in the market? Well, yes and no. There's a difference between reaction and confirmation. Okay? In other words, when I get to an area, I want to see something happen to confirm the stock's going lower. Okay? If I'm just sitting there watching TV, and all of a sudden the stock blasts off to the downside, I don't react to that. You see what I'm saying? I don't react to the stock telling me it's going lower. I'm sitting there waiting for the stock. I'm saying, come on up, stock. Come on in this area, and then I will know exactly what to do with you and when, and get a great entry with a nice stop, rather than just sitting here, well, I don't know what's going on, and oh, wow, look at that big drop. I better chase that short. Does that make sense? Actually, Mike, stay off Facebook while, well, I don't know who would be on Facebook now, but stay off Facebook while trading, while entering positions and looking. However, Mike, when you're managing, best to be on Facebook. Maybe Facebook in a different room. Maybe Facebook at your neighbor's house. Which comment, Kimberly? Oh, this whole slide? Thank you. Love the light bulbs. I can't emphasize this enough. And for those of you that, yeah. Well, that's exactly, Kimberly, too. This is what I teach. It's about the whole concept of understanding charts and what to do and what we look for, and the concept of failure patterns for entries and all these different things. And those of you in the room with me, this is extremely boring to you, because this is what we do, right? This is what we do every day. We sit there and say, okay, when this gets here, when that gets there. And actually, I do have an example a little bit here, I think. But remember, this is the difference between reacting and looking for confirmation. The difference between reacting and looking for confirmation, right? like I said, I always have my little dictation on, and this afternoon I prepared the comments to put into a little summary I give the room every day, well, some days. Typically, I send the room members a tentative or an early watch list for the next day. I usually send it at night. Sometimes I send in the morning. Once in a while, I don't send it at all. When I send that watch list, I may have no comments or I may have some thoughts about the day. And I had a thought today that I put out and I typed this afternoon and I said, hey, when I was looking through the slides, I go, what a perfect place to insert this, right? If you have no purpose in sitting there, you shouldn't be sitting there as a day trader. It kind of, let's just say you took a 15-minute sell setup, right? Don't even know what that is, but you took a 15-minute sell setup. And you have a stop in place, right? So you put your stop in the screen, boom, there you are. Your stop is in, it's in stone, there it is, okay. And now you look at your management plan, and based on a 15-minute chart, there is no possible way that you could change that stop in the next hour. And that's usually the case, right? So you have the stop in place, you have a target that you could maybe hit, and based on your trading plan, there is no possible reason for you to be sitting there, but yet you sit there, right? Anybody experience this? Want to admit it? You're not looking for another trade. You're in a trade, and for some reason traders feel that it is necessary to be there staring at the stock with your hand on the mouse, right? And if I were to say to that person, what are you allowed to do right now? They would have to answer, well, nothing. I have my stop in place. There's no possible way the stop could be lowered in the next hour. And I have a target in place that I could take. And they'll just sit there with their hand on the mouse. Like, what are you doing? Well, for some reason, people feel that it is critically important to sit there and manage. And the truth of it is, I don't want to say 90% of you listening to me because there's a lot of seminar students here, but 90% of any group I would talk to, if you know how to trade, if you can pick reasonable charts, you're hurting yourself by managing, more likely than not. And that's simply the truth. Check it yourself if you don't believe me. So I started, the slide is that I started comments for the room, and I want to give you a little entry to that, what the comment was going to be about. And it's simply that, well, here, we'll read the comment because actually it explains it. So I just started there, as you know, every day, okay, and then it's long, so I went to the next page. So here we go. As you know, every day when I'm done, and those of you in the room, you're going to get this tonight, but when I'm done with the opening session between 10:30 and 11, I typically hang a sign in the room that gives you an indication of whether I feel there's anything worthwhile to look at later, whether I may come back for a trade. Sometimes, due to the market pattern, there is no way I want to come back. Paul, how could you say that there's no chance you'll find a trade? I can say that very easily. I say it all the time, right? For example, if we're in a bearish market reading again, and we have already dropped significantly, and I have nothing special on the long list, meaning unique, I cannot short anything that extended, and I'm not going to be long in a downtrending market, so I'll be done, right? And you guys in the room, you hear me say that sometimes, right? I say if we rally back at lunch, I'll be here to look for another short maybe, but if we keep dropping, there's nothing to do. Just keep the shorts we have, say nice day, and move on, right? So other days, I have no enthusiasm, but I have several things on the screen that could set up. So I have my charts filled with different things that I like that day. And nothing is standing out to me. But yes, this is where it's possible that something I liked in the bigger picture could come to an area and set up properly, and just maybe come back and take a peek at the screen and I see something. Now, for me to check this out takes me a couple minutes at the most, because these are all the things on my screen. I look at the time frames, look at the setups, and okay, nothing going on. And sometimes I'll type on the screen, hi, checking in, nothing new, see ya. It's not all that often, but today was an exception. Today, I hung a sign saying, hey, I'll be back and we'll be looking at lunch today, right? Somebody in the room, confirm, yes? Today, I will be back to find a trade, right? Yeah. Why is that? Well, it's because, number one, we had a lot of unique things because we're earnings season, a lot of things were gapping. It was a unique thing. And number two, I felt that given the pattern in the market between yesterday and today, I felt it would be very good that any rally would be sold in the afternoon. So if I have a huge market bias that we're going to roll over at lunch and drop, I want to be there and find something. And guess what? Both were the case today. We had a lot of unique stuff, and I had a market bias that we would drop. So I came back. Oh, I can read here. So that was the case today. We had a lot of unique stuff on the screen, number one, and I had a market bias over that we top out over lunch and wanted to be there for that. I ended up coming back and took a couple of shorts that did nicely. Now, no home runs there. I just want to show you again. This is just from this afternoon. This is from a couple hours ago. Two things in the afternoon I took, and one was not Cisco, but a Juniper. One was Juniper. It made a little bit of money. Okay, it made a quarter of an hour or something. So not hiding it. It was a money maker, just a small money maker. The other one I took was GLW. There it is, GLW. I did not trade this morning. Now, if you look at this daily chart, would you have shorted that open? Well, let me say what the slide says here. Would you short that new low? Assuming we made a new low here, would you short the new low? Anybody out there who's traded more than 3 hours? Yeah. And why would you not short that new low, Kimberly? Isn't it possible it could just keep dropping? Isn't it possible it could do that? Yeah, I got to accept that answer. It's a subjective thing. But you're right. It becomes a low odds trade, right, Kimberly? I don't want to. Yeah, once in 50 days it may make money for me, but that's not what I want to do. So naturally, I wouldn't do that. Would you short the open? Well, I have the same answer. I didn't want to short this open because the daily was such a big drop. However, the daily having a big red bar like that, look what happened yesterday. And again, this is understanding the language of charts. We gapped up on GLW yesterday, right? You follow this? We gapped up to here. We tried to run higher, and what happened? It got smoked, right? Now, you have to understand what's going on here. This is going to lead to future selling, right? But here's the thing, not necessarily at the open. Now, this one dropped. It did, right? Now, I had my screen full of stuff today, so there are a lot of things I could have done. But there's no way I'm going to short that. GLW was not under consideration right after that open. But what happened was I came back at lunch, and here's what I saw. I saw that. Now, I know KMB is going to drop eventually, and this is what I call a good setup to see it drop. So I end up coming in and taking, and look what it says there. Wait for a setup. You cannot stand the thought of not taking. That's a good way, a good strategy to use to, and that of course is from the Jimmy Rogers quote, which if anything was the quote that I recognize as being, kind of a wow. That little quote maybe changed me. My favorite quote of all time. So that's what I came back to see. Got a great entry, and then of course in the room we say boom when that happens. So made some money in the afternoon coming back. Yeah, it's the money in the corner quote. Yeah, the first line's a little cliche, money in the corner, but everything after money in the corner to me, it makes me tingle when I read it. It really does. So boom, and not a huge trader thing. I'm just pointing out though, the mindset that I knew there was an area up here. And by the way, I didn't know if it could be here or here, but you see, so here's an area, I can't do anything here, but then I see the reaction to this area. And then I find an entry, and the entry is on a failure pattern. And then boom, and this becomes a very high odds trade to me, right? Yeah, so if you want to look at a chart on your own, I'm not going to pull it up because it's kind of a pain. If you're looking at a 2-minute chart, the 1154, 1156 little pivot, I call it, had a low of 3254. So it was under that I wanted to short because that was the little mini micro support level, and I wanted that to give it. Now, this is not what I call a great entry. I needed a lot of confirmation on this, and when you understand trading, you understand entries, you have a whole variety of entry possibilities that go anywhere from I want a lot of confirmation to get me in this darn thing as quick as possible, right? So that was the entry for that. It was not what I would call a really tight high money making entry, but in the afternoon wanted to add an extra hour or two for the day and took that entry. Okay. Well, the pattern was what I would call a 2-minute retest and failure. A 2-minute buy setup, retest and failure. And that's what happened between 11:30 and 12. And then it actually, so the entry is actually pretty close to 12:30, right around 12:30. Okay. Yeah, and Art is in the room, and Art said that this would be a great trade. And Art also said that Juniper wouldn't go anywhere, and Art was right. You were right, I was wrong. Thank God Juniper made some money, or I'd really have to be eating crow right now, yeah. Art is, for those of you not in the room, Art is the room's ass. What's the matter? It stands for assistant stop and target setter. Assistant stop and target setter, ASS. That's what he does. Gotta be. He does a darn good job. Does a darn good job. So, some days he takes $100 stock and picks a target within 2 cents. Rather amazing. All right. So here is your gratuitous chart scene. What did I put here? Oh, the title on here I put at the last minute. This is a big deal to me. Demand the setup. Listen to these words up here. Demand the setup. Yeah, I wish I wish I could get out Art's employment contract. It's really tough though. He's got lawyers and all kinds of stuff. Listen to these words though. Back to serious here. Demand the setup. Demand the setup. You need to tell the stocks what you want to see and demand it happens. Remember, when you're taking positions, right, you have the choice of saying yes, no, yes, no, yes, no, right? Now, when you're in something, that's when you have to more or less maybe react to what happens because you don't have the choice to say, well, I'm going to hold this stock at a big loss because I don't like the way it just stopped me out. You don't have the choice to do that. But when you're entering something, right, you have to forget about missing something. You have to be able to say, here's what I'm going to wait for. Well, even for example here, if this stock, I may have found another stock, but if you can see my cursor here, I was not going to trade this here. This was not a good confirming type of thing. Some of you may call that a sell setup or some other garbage like that, but it's not, to me, anything confirming thing. Right here, we could have blasted off and gone higher. I have no way of knowing that. So there's no way I would have taken that trade here. But could it, Kimberly, could it have dropped to a new low from right here? Could that stock have just dropped there? Isn't that possible, right? People say to me, Paul, how did you know to wait? Well, I didn't know to wait. I have no choice but to wait in that case because that's not a setup to me. Does that make sense, everybody? And if you want to talk about, boy, if somebody remembers the name of the recent presentation, but I did a whole presentation about FOMO, fear of missing out. It kills more traders than probably a lot of other trading diseases do. FOMO will kill you. FOMO will kill you. Fear of missing out of trades. That was a great presentation, by the way. I don't know the name of it. If somebody knows the name of that one, let me know. It wasn't called FOMO, but it was Patience. It was called Patience. Matter of fact, it was just two back. It was just a month ago. Patience. There was no long setup there. Well, correct, Mark. I would never take that long. I'm very, I'm not, ready, everybody cover your ears. I'm not much of a bi-directional person. I tend to be unidirectional. In other words, you brought up a great point, Mike. My bias, my picture of power comes from a higher time frame. So you didn't know where I was going with that, did you? It comes from a higher time frame. And it can't change that quickly, right? So to me, this here, Mark, see this daily chart, Mark? I can only be short bias. I can only wait for a short setup. That's all I can do. I'm not allowed to be long. So the only thing I would disagree with you, there's no long setup. You're right, there was no long. And you can't look back and say, oh, gee, this is the traders that drive me nuts. They look back and they say, oh, you could have made money long here. No, you couldn't. You have to get that out of your head. You could not make money long there because you might have today on this one, but the next 6 are going to stop you out. It's a stupid trade. You don't do it. Now, there are setups you can do. I'm just saying I would never do it on this one. The only thing I disagree with you, Mark, is until it clears the gap. Clearing the gap really has nothing to do with anything. Gap fills are nothing. They're not support. They're not resistance. Clearing this gap is meaningless. You would have to go back into, I'd have to see an event happen that would get me bullish. There's several things that could happen. I could draw a chart for you, but that would not be likely to happen on this stock for a while. Okay, not be likely to happen. Moving on. We're only 12, and I'm on number 10. And the last two I think are kind of quick. 90% of traders with some technical skill will not make it because of management style that is designed to lock small profits and small losses. You may have heard that before. Again, I cheated a little bit. This is not kind of it's a one-line cliche. It's not from a pile that we never talked about. We talk about this all the time. But again, taking the attitude and maybe starting from the top and saying, here's 12 things to remember, rather than coming from the bottom. This is the top line thing to remember. If you look at your trading results, and again, I'm going to make this assumption. Let's exclude people that are subscribers to things at DTS, all you free members. I'm willing to bet you if you're currently trading, and if you want to, send me an email and say, wow, title the email, wow, Paul, you were right, or say, wow, Paul, you're wrong. But I'm willing to bet you, if you're not a DTS subscriber, I'm willing to bet you, if you've been trading, that you have a whole collection of small winners and small gainers. You weren't designed to do that. You didn't start off doing that. You didn't say this is my goal, but you ended up this way. And you may be a very good chart reader, but yet you just can't get past breaking even. And you never will until you figure out what you're doing. 90% of traders with some technical skill will not make it because of a manager style that is designed to lock profits and small losses. Design may not be the right word there. As a matter of fact, I would change that if I could right now, because you didn't intend to do that. A manager style that you have evolved into. There's the words. Oh, I don't have my pen. I can't write. Cross that out. Because of a management style that you have evolved into, right? True, everybody? Nobody wants to lock small profits and losses, but you have evolved into that through fear, lack of confidence, and lack of proper trading skill. That didn't get a single light bulb moment? Boy, okay, all right. Remind yourself that for any trade, you are luing. Now, luing is a technical term. It's a way that we scan at night. Art's familiar with this. He taught me how to lue. We lue charts sometimes. No, it's a typo. Any trade that you're looking at taking, you should know the entry now. Let the stock come to you. Never chase it if you did not intend to. True or false, everybody in the room, and there's some of you here I know, every morning the top 3, 4, 5 trades, the hot list, I go over, I'm going to say virtually 100% of the time, I go over the entry before the market opens. Is that true or not? Before the chart even is drawn, right? Before the chart even begins, I'm telling you the entry. And when that entry happens, some new person will go, wow, how did you know that? But of course the answer is I didn't know that. It's just that I am not going to take it unless it conforms to the entry I want. So these other stocks didn't do what I wanted, and I didn't get in them. Now, all the time, and this is a big case of the FOMO thing, all the time we may have a stock that's a very bearish gap. Boy, what did we have today? There was we had some great trades, and I didn't get them because it didn't give me any entry. I would have had to jump in blind, almost blind, which I do. If I love something, I will jump in almost blind, but that's something I've decided to do. I'll just simply say if it doesn't trade up, I'm going to jump into it. It's a more risky trade. But if I don't have that attitude, I look for an entry, and if I don't get the entry, I'm not in it. So some things drop, and you say, man, I wish I would have used a different entry. I had, yesterday, ECCE, what is it that Pierce had? It was my trade, it was my idea, it was my favorite. Oh, it was a little thin. It was a little thin at the time of entry, and I didn't do it. What was that? Or what is it with a C? 2 letters with a C? ECCE, yesterday's list. Come on, you all know it. It had a huge drop, just like the one today did. A couple of best trades the last 2 days. I didn't get them actually. EC. Now, Weight Watchers is the trade I did do 2 days ago. EC was the one from yesterday I didn't get. And the one today, there's a 4-letter trade from today that was huge, that everybody seemed to have but me for some reason. I had RBLX, that was great. What's the other one that some of you guys had? Dropped all day? Or you were given target? ENPH, yeah, ENPH, yeah. And that's another one. ENPH, I just wasn't looking at it at the right time. I had half dozen things. You never know. If I knew NPH would have done that, here's a trading comment for you. If I would have known that ENPH would have been the biggest drop in the chart, I would have got in it. But I didn't know that, so I didn't get in that one. Remind yourself that for any trade you're looking at taking, you should know that entry now. Now, this is true for day trading. This is true for long-term investing. This is true for swing trading. You do not react when something happens and go, oh my gosh, I got to get that. It'll either come back on you to your regret, or you're going to end up with not the profit you should have, all right? If you do not know the phrase in italics, you will fail. Let the stock come to you. If you don't know what that means, you're going to fail. And I put a note here, explain what that means. I'm not trying to be mean. You'll frequently hear me say you will fail. And please forgive me. I'm not trying to be mean. I'm not trying to be negative. I'm not trying to be pushed for personal reasons. I'm just simply trying to tell you a fact that I know. I've been doing this a long time. I'm familiar with training traders. I've trained a lot. I'm familiar with people who never get trained. I know why they fail. I'm just trying to point out to you now. I'd rather have you dislike me and say, oh, that guy's a jerk. He's saying, he thinks that if you don't do this, you're going to fail. Fine, call me. But you know what happens sometimes? You know what happens? Is that down the road, even if you dislike me right now, down the road, something happens and a little thing clicks in your brain. He goes, you know what? That jerk, I forgot where he's from, he said this would happen to me, and it's happening to me. And you know what? It opens your eyes. So whether you believe me now or not, there are things that I know you will never be successful. You know what? You may be successful for a week, for a month. I know people that are hot as a pistol for 2, 3 months. And you know what? They're not around now because they didn't really have a concept of trading. They knew how to buy anything long in a bullish market. In the first pullback, they got slaughtered or whatever. So learning to trade should be something that should be forever. Longevity is everything in trading. I only respect words from people who have been around a while. Not the flash in the pan that, oh, well, I'm up 200% this month, and then 3 months from now they're not around anymore. So yes, there are things that if you do them, you will fail, it's guaranteed, whether it's today, tomorrow, or next week. And if I can point these out to you, whether you like me or not for saying it, down the road, perhaps something will click with you. And you'll be sitting there trading, you'll be having a bad day, and you go, you know what? Just hit me. That guy said, don't chase things. Wait, now I know what it means to let it come to you. I understand it. So anyways, hopefully it's helpful. Kimberly, my scale, if you will, is to shoot for making an hour a day, averaging, not making, averaging, 20-hour month. And I think if you get anything over 18, you should be making your daily, your salary times 2. And I think 15 to 18, you should consider a good month. 12 to 15, I think you should say, okay, I'm happy I paid my bills. Under 12, you should maybe start saying, hey, wasn't the best. Did I do something wrong? Was it a tough market? What was the problem? Because Kimberly, one that you'll want to watch, Kimberly, if you haven't, I don't know your name, so I don't know if you've been around or new or whatever, but if you go to the free stuff page, Kimberly, there's a Hall of Fame section, and one of those Hall of Fame videos is called From Chart Reader to Trader Investor, and it discusses that topic. I think that'd be a great one for you to listen to because it's right up the alley of what you're talking about, okay? You know the free stuff page, right? It's I think it's still in my memory here. Is it? Yeah, there it is. 12 years ago, you said if you don't have a written plan, you'll fail. Mike, that's true. More than that. I've emphasized for day trading. I think you should have one, period. But I feel it's virtually impossible. Here's the big thing too, Mark. Not just that side of it, that you will fail without a trading plan. The other side of it is this. There's never an end to the number of people that email me that raise their hand and say, I've arrived. I've done it. I understand it now. It all seems so better. And you know what the number one reason is that somebody got out of the thick and became a good trader? The majority of time, it's that I finally got serious about condensing what I know, putting in a plan, and following it. That's what the answer is the majority of times. So that's the other side of it, why it's important to do that. Because, I mean, if you think about it, you really can't improve unless you have a plan that you said you're following or not following, right? Yeah, thanks, Jax. That's absolutely true. And anytime I go into a more extended discussion about trading plans, which I'm not going to do now, I discuss how you should make a trading plan while you're still paper trading, even though it's going to stink. Well, let me add that comment since we're running over anyhow. The biggest reason people wait to make a trading plan, why do people wait to make a trading plan, everybody? Because most of you probably don't have one. And if I said, boy, you've been trading for 18 months, why don't you have a plan? What's the answer people typically say? And not that I'm working on it, I know I'm working on it, but what are they working with? Right, exactly, Mark, exactly. They want to write the perfect plan, okay? So here's a punch in the stomach for you. I have 200 to 300 trading plans in a folder somewhere that people have sent me. Somebody other than students of mine, take a guess. How many of 250 plans did I email back, nice job? Out of 250, how many people who waited a year, 2 years, 5 years, how many of those people who waited that long to write the perfect plan, how many wrote a good plan? Yeah, two, Jax. 2 out of 250. 2 plans were okay. Which means that even if you wait 2 years, your trading plan is going to stink when you write it. So why not write a stinky one today and start improving it tomorrow? Because every trading plan is, like Jack said, a work in progress. It continues to need to be changed until it doesn't. And even when it doesn't, it'll still need to be every week or every month or whatever going forward. So there's never an excuse to say, oh, I'm working on it. Oh, I want to write white and write a really good one. If you've not written one, here's my suggestion a week ago to some other group. I said, go to the bar tonight or to your favorite restaurant. Ask for a cocktail napkin. Bring a pen with you and do your trading plan right there while you're waiting for dinner. That's it. There's your plan. It won't be a good one. It won't be finished, it won't be perfect, but that will get you on the road, and you'll be light years ahead of all the numbnuts that say, oh, I'm waiting to write the perfect one. Number 12. Good, good plan, Jackson. I think they call that the goal, not the plan. I'm not really sure. What diet are you on? Well, I'm a diet. I want to lose 50 pounds in the next year. That's my diet. Well, number 12. I won't say it's my last comment, but number 12. There are different ways to make money. Sometimes I've been accused, because people don't understand me, of saying, Paul, what you're saying, that's not the only way to make money. And I got to put my hands in the air and go, I never said it was. I never said it was. I never said what I teach is the only. As a matter of fact, I say the exact opposite. I say in very frequent presentations and even in the seminar class, I say there's a lot of ways to make money. There's different ways to skin the cat. But my question always is, do you have one? Do you have one? Even through what I teach, and this always kind of confuses people. There's some people who are a little more novice, naive, new, that think, okay, if I go through Paul's seminar program, that everybody coming out of there is all going to sit in a corner waiting for the exact same stock, the exact same time and no, that's not it at all. You learn how to read a chart, and then you go out and you find your niche of what it is you like to do. It's kind of like, what the analogy would be, it's kind of like saying, if you and I both took golf lessons from the same person, like if Jax taught us both how to golf, it's like saying, well, after we hit our drive, we're both going to land in the same exact spot and walk over there and hit it. Well, no, that's not the way it is. So there are different ways to skin the cat. Even within my network of people, even within my network of trading, there are different ways everybody can make money. And you go outside of that, even beyond what I teach, certainly there's different ways to make money. I fully believe that. What I teach is a certain way to look at charts that's based on what is happening, based on technical analysis, looking at charts, looking at how to enter something, how to manage it, how to remove the psychology the best that you can. That's what I teach. And certainly there's other things you can do. But it still begs the question, what are you doing? What have you learned? Trading it's hard to phrase what it is. It's not hard. And I don't know if you want to call it easy when you learn it. I mean, learning trading in a sense is easy. And I take that from, I don't mean to be demeaning to anybody struggling, but taking it from this point of view, well, let me ask you guys, to fully understand every bit of technical analysis that's needed to make money, how old do you have to be? What grade level do you have to be through to understand all of the complexities of technical analysis? What grade level? Graduate degree, associate degree, college degree? Fifth grade. Fifth grade level is all that's needed. I could teach a fifth grader everything they need to know about technical analysis, no problems. So think about that for a minute. Isn't that kind of scary? Because they don't need to understand macroeconomics. They don't need to understand inflation. They don't need to understand any of that. We don't care about any of that. I don't really care if today some news was announced. I don't care what the inflation rate is. I don't care about the earnings of GLW. What I care about was this little setup happened. And based on this, I knew with a fair set of good odds that the stock would be going lower if it met my entry criteria. Why is it going lower? Well, because there's more people that wanted to sell it at that point than there were that wanted to buy it. Why did it go lower from a fundamental macroeconomic world point of view? Who knows? I have no idea. Maybe somebody just discovered that Corning blows up in the microwave. I have no idea, and I don't care. Back to the last slide. I think you can look at any chart and say yes or no. So there are different ways to make money. Do you have one? If you have a concept, if you have the knowledge of charts, you can look at a chart and immediately say, yes, that is a chart I would save because it might do this, 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 which would make me get long or get short. Or you could look at a chart right now and say, hey, yeah, that's doing what I want. Or you could simply say, no, this chart is one of the 97% that is meaningless to me right now because there is not enough odds in looking at this chart to determine what to do. Are there any questions? And before you leave, I want to make a quick hit on something that I don't do a lot. I want to just remind you that the seminar program has a home study course, which is 110% of the class. I keep getting people saying, oh, when does the next class start? Well, my recommendation is actually that you sign up early, get the home study, and go through the home study before the live class. We're in the middle of live classes now, so you missed this beginning of live classes, but you actually should be looking, if you're looking to get in now, so that you can go through home study, and then when you join the live classes, you will have a better perception of learning. Because students don't really understand the answer until they have the question. One of my favorite little things. Free stuff page, DTS, go to the home page, go to the free stuff page. For those of you that are still learning, kicking the tires, want to get to know me a little bit better, free stuff page. Remember also, you can always join us in a trial in the DTS trading room. Go to the home page there and figure out how to do that. If you can't figure out how to get into the trading room, I don't think you're going to make money anyhow, so figure out how to do it. Any questions, anybody? Boy, here's one that I really thought was going to be cut short, and because of you, I'm going to blame it on you. You guys had some good questions, you ran long. Andrea, I have a document out there called the 100-day trading calendar, if you will. It is a guide for the seminar students. It's just simply a kind of a time frame. If you want to go through as quick as you could, just it serves as a reminder, Andrea, of how much you should be studying, where you should be in terms of paper trading, small risk, etc. So the 100-day, it's a 100-day program. And if you go here on the webpage, if you go to seminars and coaching, it's right on the top. It says 100-day schedule. It's just a schedule of what I'd like the seminar students to follow. But it's very rough. I mean, you may be on a different timeline. You may have an interruption come in. But it's just, here's a guide of how to go through the combination of seminar program, homework you have to do, beginning to paper trade, that stuff. Okay, does that make sense? All right, anything else, guys? Thanks, guys. Thank you, everybody. All right, those of you in the trading room, we'll see you in the morning. Those of you not in the trading room, if you're in a seminar program, see you Saturday for Mastering Advanced Tactics. And otherwise, I think we're getting together for a free event next Monday, right? Next Monday is scanning, I believe. But check the calendar to be sure. I never know what the calendar is. Have a good one, guys. Take care.